Welcome to Market News. Today is August 19th, 2026. I'm your host. If you had to capture the mood on the tape today in one line, it would be this: the AI trade is running hot, but the warning lights are blinking on the dashboard. Nvidia, Alphabet, and Apple are all making moves that scream conviction, but across the broader market, fewer signals are green than red, and the bears actually outnumbered the bulls by nearly 3-1. Let's walk through what was moving the dial. Today, there's no question that artificial intelligence and semiconductors dominated every section of the news. Nvidia was everywhere. The stock traded at $2.1974, off about 2.3% on 103 million shares of volume. That's more than 100 million shares, one of the heaviest names on the board. And while the share price dipped, the stories around it were anything but quiet. Burry flagged a new AI chip startup run by Harvard-dropouts as serious competition for Nvidia. You do not need to hear that from Burry and stay calm. The fact that a founder story from Harvard dropouts is getting Burry-level attention tells you how quickly the competitive landscape is shifting, even within what feels like the most fortified moat in technology. On the other side of the coin, Nvidia H200 chips were allowed into China in small batches, which is a cautious green light from regulators and an interesting signal about how export controls are being dialed rather than slammed shut. Then there's the Greg Abel story, and this one was hard to ignore. Warren Buffett's successor, just yesterday on every screen, sold over 50% of Berkshire Hathaway's stake in Nucor. $175 billion warning echoed through Wall Street, and Abel piled into an AI stock that Bill Ackman himself had just exited. That is a move that reads like a portfolio-level repositioning. Greg Abel is not trimming and walking away. He's rotating $500 billion balance sheet from industrial steel into AI, and the market noticed. Apple told its own version of this story. Tim Cook's final earnings call as Apple CEO came in the same week the company hit a $5 trillion market cap. That is an absolutely staggering milestone for a company that has been in the index for decades. What's coming next for Apple's AI strategy, what the successor will prioritize, and the fact that Western Digital could be 51% overvalued based on Apple's China memory push, these are the threads investors are pulling on. And then there's Apple's $249 AirPods learning how to see, which is the kind of consumer product play that sits at the intersection of AI and hardware and feels, for the moment, more tangible than the infrastructure bets. Now let's talk about the headline that tied corporate strategy to global capital flows. Alphabet raised $3.9 billion in an inaugural Australian dollar bond, and the yields came in nearly 7%. You read that right, nearly 7% in Australian dollars. This was a debut, and the market absorbed it. But there's more to unpack. Alphabet was also reported to be eyeing a $5 billion Australian bond issuance as AI spending surges, with the cost of capital landing near 7% across various tenors. That is a lot of debt at a lot of yield, and when a company that size is borrowing at 7% to fund AI infrastructure, the market is thinking about what that means for margins, for leverage, and for whether the growth curve can justify the carry. Meanwhile, Google antitrust remedies are being cited as growth catalysts by analysts looking at Magnite, and DBS Hong Kong partnered with Visa and Preface on an AI readiness and intelligent payments initiative. The Alphabet story is not one headline, it's a suite of corporate moves, capital raises, legal shifts, and partnerships that are collectively reshaping what Alphabet is and where it's headed. Turning to the ASX, there was a solid round of FY 2026 earnings from Australian companies that deserves attention. BWP Group reported FFO up 4.5% and gearing dropping to 18.5%. That is a clean balance sheet signal. Boom Logistics posted NPAT surging 37%. That's a very healthy profit jump. Lottery Corp came through with resilient results, and Superloop delivered what was described as record growth alongside strategic milestones. Viva Leisure rounded out the round with record growth and a maiden dividend, which for an unlisted that's still paying its first dividend is worth a watch. These are mixed but broadly positive signals from the Australian market, and they give a little perspective on the global AI trade by showing that not everything is about semiconductors. In energy and commodities, the picture was fairly clear. Ardian acquired 460 megawatts of onshore wind assets in Texas. That's a meaningful renewable energy acquisition, and it signals continued flow of capital into onshore wind despite the broader macro headwinds. ExxonMobil awarded Rovuma LNG contracts, which adds detail to the larger LNG supply story in East Africa. And on the commodities tape, oil climbed further and the bond sell-off slowed. Bond markets are always the canary in the coal mine. When that sell-off slows, it tends to mean something, even if what it means shifts depending on the backdrop. On the biotech side, there were a handful of updates that are worth flagging. Enrollment concluded in Lynch's phase Roman II RHPD-GFBB study, which is a clinical milestone for whatever comes next. B1 Medicines and its partners renewed the Brukinsa Access program for chronic lymphocytic leukemia. That's an ongoing commitment to a treatment that's clearly gained traction. And atop biotech funds current buys span Johnson & Johnson, Eli Lilly, and several biotech-focused funds and ETFs. The biotech trade is never a one-note story, and today it sounded a bit like a portfolio play across pharma rather than pure speculative biotech. There were a few one-off stories that still matter. Stanley Druckenmiller was out exiting 5-chip and photonics stocks, Intel, Micron, Broadcom, Lattice Semiconductor, and Coherent, while adding to 2 others. That kind of move from Druckenmiller always gets read as a warning signal by someone, because the guy has a track record. David Tepper sold his entire SanDisk stake in the quarter the stock peaked, which is the kind of timing that gets you a headline and also reminds everyone that even smart money has an exit strategy. And on the aerospace side, the Boeing Lockheed venture ULA tripled its private bond deal to $1.5 billion, which is a significant capital-raising move for a space-focused joint venture. Now let's bring in the technicals, because these numbers are worth looking at. Across 10,793 symbols analyzed, the signal count was 9,842, with only 13 bullish versus 37 bearish. The bears are winning by a significant margin, almost 3-1. The top bullish signals were mostly small names showing strong momentum up, MIS, MBI, Zasawa, and WOW, XHG. On the bearish side, the top flags were for potential overextension on XHG, and WOW, and KT-TAW, plus overbought territory on OVAL and the SOX semiconductor ETF. When you have a ratio like that, 14% bullish versus 27% bearish, it tells you that despite the AI headline noise, the breadth across the market is not keeping up. Let's look at the movers. The gainers section was extreme. CIS was up over 4,500%, NRDY over 1,300%, GLMD over 700%. That's tiny cap, low float, high volatility action that's hard to use as a market proxy but is always worth noting because it shows liquidity is flowing somewhere. Among the more substantive names, XOS jumped over 112% on 110 million shares of volume, and CAST was up 144% on 154 million shares. These are not big-name market movers, but the volume tells you speculation is alive and well. On the loser side, BCPC was down almost 87%, CTG down over 40%, and SNSC down over 32%. And then there's Intel, the giant itself, trading at 96.69, down 6.6% on 122 million shares, which puts it firmly in the high-volume category for the day. You pair that with the Druckenmiller exits and the Burry competition warning, and Intel is just one name in the middle of a much larger conversation about whether incumbents can keep up with the speed of the AI chip cycle. Finally, Nvidia held 103 million shares. Nvidia dipped a shade and still made the top 10 by volume. Interactive Brokers holding $930 billion in customer money and counting what that earns at today's rates is a fun macro lens. AI labs paying millions for data, the opportunity to cash in. These are all threads in the same tape. Capital is moving, rates are shaping behavior, and everyone is trying to figure out who the winners are and who's paying the tab. So where does that leave us? The AI narrative is as strong as ever, no one's arguing with the direction, but the market structure beneath it is more fragile than the headlines suggest. Nvidia is trading lower with massive volume. The technical signal ratio is skewed bearish. Greg Abel is moving money out of industrials and into AI. Michael Burry is naming competitors. Stanley Druckenmiller is trimming photonics and semiconductors. Alphabet is borrowing at 7% to fund the next wave. And yet, across 10,000 names, the green lights are scarce. The question for investors right now is not whether AI is the future. It's whether the market's risk appetite has priced in the costs before the costs arrive. The infrastructure will be built, the bonds will be issued, the chips will ship, and the data centers will power up. The harder question is whether the margins, the competition, and the balance sheets can survive the buildup. That's all for today. Thanks for listening. We'll be back tomorrow with another update on the market news.